Hi, my name is Jim Pierce with Baton Investing. Every day, investors like you come to us who realize their current investment approach just isn't working. We give them an easy-to-use system that has beaten the S&P 500 by more than 300% since 2003. It takes just 30 seconds or so a month to use, and most importantly will help you achieve your financial dreams. Every couple of weeks, I give out a free stock tip, and today's is a recent portfolio addition called TriCo bank shares. Now, you probably haven't heard of TriCo. It's a small community bank in Northern California. In fact, the TriCo stands for Tri-County, and this is the area north of San Francisco. It's primarily agricultural, but our system now has picked up this stock and actually assigned it a perfect score of 100% according to our Peter Lynch methodology. You probably have heard of Peter Lynch, who from 1977 to 1991 led the Fidelity Magellan Fund to something like an annual return of almost 30% a year, which is just phenomenal. Now, the way Lynch did that is he looked specifically for stocks that were growing faster than the overall stock market, but were priced as if they were a slower growing company. So, what Peter Lynch was most famous for is what is called the PEG ratio, and that stands for price to earnings to growth ratio. And what Lynch wanted to see was a company whose PE ratio was essentially less than the rate at which the market was assigning a value to the rate at which it was growing as earnings. So in other words, he wanted to see a PEG ratio of less than 1.0. And in the case of TriCo, the PEG ratio is 0.64, so it's well below Lynch's threshold of 1.0. However, he also wanted to see that the earnings, the rate of growth in earnings per share over the past 5 years was sustainable. And his optimal range was a minimum of 20% and a maximum of 50%. And in the case of TriCo, over the past 5 years, they've been growing their earnings per share at an average rate of 22%. Finally, Lynch had a special ratio just for banks and other financial intermediaries, the equity to assets ratio, and he wanted to see that that was at least 5%. And in the case of TriCo, it's more than double that at 11%. And the reason why he wanted to see that with financial institutions is sometimes those asset banks can shrink when the real estate market, for example, has a recession, or if it's a bank lending in an industry that's susceptible to wide swings. In the case of TriCo, most of their business loans are in the agricultural sector in California, which has been very resilient. And in fact, the company has been doing extremely well. Right now, shares of TriCo, and the symbol is TCBK, shares of TriCo are priced right around $24 a share. Now, earlier this summer, management raised the dividend to 13 cents a quarter. That works out to a yield of about 2.2%. So we think TriCo's a buy up to $26. Little bank in a solid economic area of California that, in fact, just took over another large community bank. So it should be able to continue with these growth numbers for years to come. But it's TriCo bank shares. Now, TriCo is just one of 10 stocks that we hold in our portfolio at any one time. And every 4 weeks, we essentially take our Peter Lynch formula, along with formulas based on 9 other of the all-time great investors, and we pick just the 10 stocks that rate the highest. And this month, TriCo is one of them. Hopefully it will be next month. Maybe it won't. Maybe something else will score higher. But this is the system that has allowed our portfolio to beat to more than triple the S&P 500 over the past 12 years. Now, if you'd like to find out more about how our system works, just to go to batoninvesting.com and click on how it works. There's also a 3-question assessment you can take to determine if our model's right for you. It's not right for everybody. Usually only about half the people that take the assessment decide that it's right for them, but maybe you're one of them. So please go to batoninvesting.com now, and I'll see you again soon with another free stock tip. Thank you.